Okay, so we're gonna look at one of the trades that I made this week. This one actually happened to be a day trade. Most of my other trades are like swing trades. This one was a quick day trade, which I set a trailing stop on. So let's look at how it went. So earlier in the morning, I purchased some of this one, ticker symbol LABD, for 50 shares at 17.85, and then another round of 75 shares at 17.75, and ultimately closed out the position with 125 shares at 19.26. So let's look at it, and then we're going to do an analysis on the timeline. So the first 50 shares we got at 7:16 a.m. and the second set of 75 shares we got at 7:30 a.m. and then we had a trailing stop that was hit around 10 o'clock. So here it is right here, 10:11 a.m. So basically with this trailing stop, what that meant was I set it in at 17 cents, meaning that if it went down from its highest price, which was at the time 19.45, to automatically me out the position. So as it continues to go up, right, and then the moment that it started coming down, if it goes down by 17 cents, I basically said, hey, trigger me a market sell, get me out of the position at whatever price, whatever best available price. Now I could have set a limit price as well, so that way if it hit the 17 cent to get me out at a limit order of, it could have been like 19.30, or I could have tightened this up. What I like about the trailing stop is that you don't have to continue to watch your particular ticker symbol that you got, right? So you can enjoy the rest of your day. So as you can see, once I entered the position over here, basically I added my trailing stop, so I wanted to lock in my profit and enjoy the rest of the day, right? Now, if you do that across one trade, 2 trades, 3 trades, up to 5 different trades, that helps give you that peace of mind because you don't have to look at each ticker symbol 100% of the day. So now I'm just going to scroll across the timeline just so you can see, kind of get an idea. Started off up here, right? I'm not in the position just yet. I see this huge dip, right? Still not in there yet. Then we get in, right? And what we want to do is try to get in at the bottom, but you can't time the market. So you put your best price in. My best limit price was at the time, when we go over to our bar chart, we'll be able to see it. And what I'm looking at right here in this particular situation is that, hey, this particular ticker symbol is down 10%, right? Is it going to be down 10% this entire day? In my opinion, I think not, right? So I want to get it, when it's down, way down here at 10%, right? So I captured it, locked it in, got 125 shares, right? And then what I want to do is ride it up, right? So as I ride this up, I'm, you're happy because you're making money right now, right? And then because you have your stop loss in, you're okay because you're saying that, hey, if it goes down 17 cents or 5 cents or whatever you put in, you're going to lock in some profit, right? And I got out of the position, not right here. See, at 9 a.m., I wasn't even looking at it, right? Most people would look at this and then they get nervous and get scared and say, hey, get me out, which is perfectly fine. You still made some money, right? But because I wasn't looking at it, I was able to enjoy this nice little ride up here. Now, if I was looking at it and thinking to myself, oh man, can I take it all the way up? I could have, right? But like I said, I want to enjoy the rest of your day. So as we continue to let this ride up, right around here, I think I got exited out of the position, right? Because it went up to $20, right? But depending on which exchange it is, it'll have different prices, right? But then it got me out somewhere around here, around the 10 o'clock part of the trailing stop over here in the right. So let's see if we can get that at it. Okay, so let's head over to bar chart so we can get a different perspective of the view, right? But before we do that, just so you can see what the expanded view looks like, This is level 2 data from Robinhood. this is cool. I like using bar chart instead, right? But you can use whatever chart that you like. So let's head over to the bar chart. Okay, so from here, here's what I'm looking at early in the morning, right? These time differentials down here is in Eastern time, so just subtract 3 hours and then you'll get Pacific Standard Time. So right around here, you see this long red candle. I have my alert set up, right? So the alerts basically let me know without even looking at the chart, hey, this thing dropped by your amount that you set in there. So when that happens, it lets me know that, hey, this could potentially be something that I can jump into. So I went ahead and set my limit price, right? So that it can execute around that price range, or, you know, when it get hit. And then I rolled it up. So it's 955, which is basically 655. And then we'll keep going, right, to see exactly what happened, right? And you can see the price differentials here. What I was looking at was the RSI, right? Notice what the RSI says over there, 2383, right? And this is the 1 day 5-minute chart. You can change it to a 2-minute chart, 1-minute chart, whatever you want to do, right? And you'll still get around the same thing. So I like looking at the 1 day 5-minute chart in the morning. And right around here, 12:45, 1 o'clock, that'll be 10 o'clock. Okay, so right around here at this mark, it automatically exit me out of the position. So I was able to get it down here, ride that wave, and lock in that game. Let me see if I can add a study tool. Let's draw a trend line. Okay, so I don't know if you guys can see that, but it's a yellow little trend line. So I was able to jump in right around here, right? And then ride this wave up and automatically get exited out of the position right here. So I think that trend line, that looks pretty good. Let's see if I can make it in a dark mode so you can see it a little bit better. Okay, so this is the same chart, right? Just in dark mode. So then that way you can see it look a little bit better. So I was able to ride this trend from down at the bottom up here. And then once it started going down, exit me out the position. I like that setup. That gave me a profit for the day. All right, and here's a little quick view of the portfolio of some that we had this week. All right, so here's a quick look at some of the trades that we have for this week. Okay, as you can see, I put my little notations in here. I purchased the first batch of 50 at 17.85 average. Second batch, 75 shares at 17.75. That gave me a total of 125 average of 17.79. Now you say, okay, well, how do I figure out the average? Well, if you're using Robinhood app, it's already there. And then we sold the position on the same day, which is considered a day trade, 125 at 19.26. Right? That gave us a profit of $183. I'll take it. Okay, so just to recap, we're going to look at our timeline here. So we were able to get some of this particular ticker symbol right around here, and we were able to exit the position right around here, which is good. So we profited off that position. And then we're just going to look at the buy history. We got 50 shares at 17.85, 75 shares at 17.75 for an average of 125 shares at 17.79. We exited the position and we profited for the day. And that was considered a day trade. Now, the reason why you don't want to consistently do a day trade is because you'll get marked as a pattern day trader. So look whatever brokerage you have, but there's a PDT rule. That's the pattern day trader rule that basically says if you make 4 day trades within a given 5 days, they're going to mark you as a pattern day trader, and you only be able to use your cash position. You won't be able to day trade unless you have, I believe it is 25,000 in your brokerage. All right.